My next guest was a cab driver, then a teacher, then eventually financial advisor. In this episode, we talk about facepalm investments, some questionable investments that people have made through the years that in most cases can lose you money. We also talk about some of the stocks he holds in his own portfolio, and we use Tykr to kind of walk through those. All right, this is a good one. Please welcome Max Becker-Pos. Max, welcome to the show.
Thanks for having me here, Sean.
All right. So why don't you kick us off and tell us about your background?
Yeah, I guess I'm one of those guys who took a while to figure out what they wanted to do. Parents were trying to push me into medicine or law, which didn't really resonate. Ended up going to university. I did cab driving for a few years. That was kind of interesting. And fell in to get an English degree, which a lot of people end up doing. And in 97, I followed a Korean girl to Korea. And it didn't work out because her parents are pretty conservative and couldn't imagine her marrying a white guy. That's the way it was. I did meet my wife there. She's Japanese. And what a lot of people like myself end up doing if you're from Canada or the US, you end up teaching English in Korea and Japan. So that's what I did. And, I love the seeing the sparkle in kids' eyes and helping people learn and grow. I love that part about teaching. I felt that English teaching was kind of a bit repetitive at the end of the day because it's very basic conversation, and I wasn't growing myself. So, and the background to this story is that in '91 in Vancouver, if you know Vancouver, we have some of the most crazy real estate in the world. I wanted to buy a condo downtown, and my dad said that's crazy. Of course, if you look back 30 years, you would know it would be one of the best decisions you've done. Not crazy at all. So I listened to my dad. I didn't buy that condo. And I knew that, I really wanted to learn about investing. My parents, they were really hard workers, good at saving, didn't overspend. They had those good habits and the discipline, but they didn't know how to make money work for them. And I wanted to learn about that. So in my 30s, I moved back to Canada, worked at a big bank for about 8 years. And that was great to learn the network and learn all about meet all kinds of cool people, learn the financial system. At the end of the day, when you're working for a big bank, you're working for the man, and your job is to push product. And that didn't really resonate with me because, nothing wrong with a product. A product is simply a way for us to fulfill our need. It's just that the bank, all they did was focus on product and they didn't focus on people. And so what I did is 4 years ago, go into private practice, and I really focus on the relationships with my clients, getting to know them, understand them, what their values are, what drives them. Because money at the end of the day, Sean, is just a tool in your toolbox. And what's more important is that Sean behind the money. We really want to know and understand that person. And that's also the foundation of a great relationship. And then the product is what comes last. And that's really the bridge to help you get to where you want to be. Does that make sense?
Does. Love the backstory there. Thank you. Now, just to reiterate here, you've been doing this, or you've had your own practice for 4 years, did you say?
It's 4 or 5 years, since 2018.
Gotcha. Okay. So it's your own firm. And what do you help your customers with? Are you putting them into index funds, ETFs, mutual funds, or do you focus more on life insurance? What's your specialty?
In terms of my licensing, I can do any kind of or many kinds of investments and insurance. When I meet someone, really, I find out what they need and what their situation is. And, it might end up be that I don't end up recommending any product for them. Usually it would be some kind of way to grow their wealth or protect them. So that could include investments and insurance. We offer the managed funds. So index fund, you're looking at 0.3% management fee. With a managed fund, you're looking at about 2%. I guess what I want to inject into that is it's not apples to apples, right? If you put all your money in Vanguard, you're getting a low fee, but you're not getting any advice there, right? So you might pay a 2% fee on your investments, but what you get with me is a second set of eyes. Like, are you in the right mortgage? Or is that even a good property to buy? Or how are you filing your taxes? Did you remember to get all your deductions? Those are the kind of value adds that I can offer that, say, a robo-advisor could not.
Right on. Thank you for that context. What I wanted to do is kind of like a high-level overview of your business model. So that's really good to know. You're not just putting people into investment products or insurance, but you do provide those services, that second opinion on things outside of investments that, hey, maybe you could save some money here and maybe look into this for taxes. I can hand you off to the right person. I'm sure you've got connections there. No, that's good. So this is a good transition point. I wanted to get right into what we would call the facepalm moments with investing, the mistakes you've seen. I'm sure you've seen plenty when you were at the bank, but of course, I'm sure you've seen a few as well as running your own practice. So why don't you dive in? Tell us a story here. I think there's one in the cannabis space. I'd love to hear your little context or backstory on this one.
There's so much to say on this. I guess the first thing is just the fallacy of the self, right? We get this Superman or Superwoman vision of ourselves that we can do anything. And when, let's say you were investing in crypto at the beginning when it was really hot, or marijuana stocks or mushroom stocks, and all you see is it's going up, and then you just think that you're invincible and that you can do no wrong. And everyone looks like a genius when their high risk speculative stocks are going up. I've lost a ton of money in stocks, mostly just minerals and gold and mining resources, things like that. I like just because I believed in myself too much that, hey, this company is worth a lot and it's got great assets. But at the end of the day, it's not what you think a company's worth. It's what other people think it's worth, even if you've done the due diligence and metrics. Tesla and Amazon, they're sitting at their market share because the people believe that those companies are worth those valuations. There's plenty of great companies out there that will pay you a big dividend and their stock prices will stagnate for years. Mm-hmm. So sentiment is huge. With marijuana, I just stood by the sidelines. Canopy Growth Corporation, so ticker symbol WEED. Mm-hmm. I think it's in the gutter today, but it went from basically the IPO to about $60 a share, and now it's back to about $1 or $2. And I knew a guy who timed it perfectly. He put in his money about $5 and got everything out at the peak, and then bought his condo. That brings me to the point that anyone can buy a stock. You just take the money from your checking account and put it in your brokerage account and buy a stock. That's easy. The hard part is when to sell a stock, and that takes discipline, savvy, and it also takes a gut instinct to know that, hey, the market is frothy. It's gone up. Everyone has piled in now. Now I'm going to sell and leave them holding the bag.
Mm-hmm. Right. To the audience here, I'd like to talk to the audience a little bit on this podcast. I'm looking at Tykr as we speak, and I can see Canopy Growth is actually, you know what, because this is on video as well. Why don't I do this? I'm going to share my screen. Hold on here. All right. So looking in Tykr, I can see Canopy Growth, ticker symbol WEED, overpriced. And the score is 28 out of 100. We want to see, for context here, Max, so you know more about Tykr, we want to see stocks with a 50 or higher. That's overall financial strength of a stock. The higher the score, the stronger the financials. And then the margin of safety here is 0. We want to see a margin of safety over 50%. So pretty scary. Look at this. Here's a chart over the last year to date. And sitting at 75 cents. And we've got warnings here on anything that's a penny stock, as we talk about in Tykr. Any stock that is $5 or less is considered a penny stock, and 99.9% of stocks that hit that range, this is US dollars. Of course, there are other stocks with similar share prices you could look at, like I'll call up, for example, Singapore or Indonesia. It's a little different, but anyway, if you get too low of a price, institutions lose interest, as you probably know, and they go looking for better stocks with higher share prices, stronger market cap, and that stock will be stuck in that purgatory, you could say, of penny stock territory. So yeah, this stock probably not going to break out.
No, there was a dead cat bounce on the chart back there, but you made a good point, because when they do enter that purgatory, it might come back, or you might be able to trade it a bit, but what is the opportunity cost of being in that stock when you could find the next one that would go up a lot? And because of all the heuristic biases that we have, and that's all part of behavioral psychology and finance, to use a lot of jargon, but we get wedded to our losses, right? Because we can't cut the cord on them and admit that we were wrong and move on. And that is is like compounding the mistake that we've made by investing in those bad companies in the first place.
With selling seems to be a hot topic in our community. People get afraid, like, for example, they will buy their first stock and their immediate next question is, okay, when do I sell? And we try to teach people that it's not in the buying or the selling, it's in the waiting. That's a quote. I have to give credit to Charlie Munger on that. But people who buy and then buy more, that's where they really build their wealth. I've seen people that they immediately enter and then they want to exit. And they think that this entry exit is how they build wealth. And again, that's not how you do it. I'd love to hear your thoughts on that.
Yeah, I would just go back to that. I think if you have that killer instinct, there is definitely a cohort of the population that can do that. Like my friend who bought that condo based on the weed stock, because they have that gut instinct as to when to get in to get out. And then they will beat, the average person that would follow Munger's advice. I guess we just harken back to the fact that investing is a marathon, not a sprint. And, it's not sexy or exciting, but that's really how you build wealth. And you go into TikTok and we're all looking for those shortcuts. Like, how do I get rich overnight? And, just sorry to say, but it comes back to living within your means, keeping debt down, sound financial habits, the discipline of rinsing and repeating, of putting away a few hundred a month and doing that over years and decades. And that's how you build wealth. There is really no shortcut. And then you go online, you see wealthy people and you think, oh, they're so lucky. How did they do it? But you don't see all the backstory and work behind the curtain that they did to get to that. You just see, oh, they're rich now. And the people that got rich by betting it all on one horse, they're in their rarity. Very,
very much so. In our community, in fact, very few that have reached out that I've had conversations have had those moments. It's extremely rare. Here's one for you. So my tax guy, he wouldn't give any personal names away, but he's telling me about a customer of his inherited a lot of money. We're talking multi-millions, and decided to get into day trading. And this guy went 9 years making a loss 9 years in a row. And then his 10th year, he made a profit of I think it was $20,000. And he was super excited about that. My tax guy was like, you just spent 10 years, the majority of it is gone. Every year is like this addiction. It was really unfortunate, but of course, he couldn't control what his customer was doing, is pretty much handling his taxes, but pretty much gambled his inheritance away playing with day trading, and then got excited over a 20, we're talking millions of dollars being traded and made a profit of $20,000 in a year. It's like, come on, you can go work at some restaurant down the street, and make more than that.
It's pretty sad. Yeah. Like, one of the key principles of investing is preserving your capital, right? Not losing money. Right. So investing not supposed to be exciting. It's not supposed to be sexy. It's not supposed to, drive our emotions like that. It's just supposed to be like I said, daily rinsing and repeating. But of course, I've got clients who do want to do their own trading. So what I say is just, work with me for a few years, build your base, have your emergency fund, pay down your debt, and start building your diversified fund, whether it's index fund or global fund, whatever. And then once, hey, you've got 10, 20, 30,000 in your regular funds, then sure, take a couple thousand and have some fun with play money. But understand that it's play money, and then you're just gambling with that, and you shouldn't expect to make money. Or I can even introduce them to like stockbrokers who specialize in that. Then those brokers can choose the risky stocks for you, and they probably have a better pulse on the market as well.
I haven't heard the phrase stock broker in years. I think back to the 80s, Michael Douglas, Wall Street. Not really a phrase I hear too often. I would look at that more as you go to a hedge fund if you want to get a little more risky, get into not only stocks, but maybe some alternative investments, which would be including some private businesses that aren't even public, and try options like that. Anything like that, I'm like, I don't know about that. That's a little risky.
Yeah, and you need to have a higher net worth for that hedge fund. The gentleman I'm thinking of, his company will take companies public. So you're getting in before the IPO. And then usually once the IPO, if it goes up, we just flip it. So it's just really, a lot of the companies you're in are really high risk. But I put in a few thousand and it became about 10,000. So some you're going to lose on, some you're going to win.
Sure. Yeah, absolutely. So I want to revert back to, we touched on one facepalm scenario, which was marijuana. I agree with that. That was a craze. Let's touch to another one. I don't know if this would be included. Did you say you made money or lost money with precious metals, minerals?
I did really well for a few years.
Okay.
And then I got overconfident, had too much in gold,
Okay.
and then had some margin calls and couldn't cover
Ouch.
them. So basically, that's one way I lost money. And then another way is too many of the penny stocks. Yeah. And going back to that story you were saying about buying and selling, buying and selling. Yeah, I would
Mm-hmm.
put money into one penny stock and actually make money, and then say, "Oh, I have to find something else to invest in." Find another penny stock, and then actually lose money on that one. So
So just to be clear, you invested in penny stocks. Is this before you got into finance or a while?
I think while, yeah, it's not what I would recommend for my clients, but what I was doing on my own.
Okay. A financial advisor getting into penny stocks. I don't know how ironic that is, but okay. Penny stocks. Can you give us a ticker symbol or company name?
Oh, I think a lot of them are defunct by now, but they would be mostly on the Canadian exchange.
Okay.
Yeah,
All right.
if you're just looking at young gold companies, young oil companies. Yeah.
This is another good pause point for the audience here. So there are companies out there, or sometimes individuals, not just companies, they'll just have their own LLC that will take companies public, and they'll get, sometimes a commission, or you'll get that IPO, the breakout price in that day, and then you pretty much run for the hills. And I remember running into a guy who that's what his job was, and he was actually interested in turning Tykr into a penny stock. Hey, we could take this company public, pink sheet. It'll be a penny stock. You'll make a bunch of money. I I am strongly against penny stock. I think it's the responsibility of the CEO, the leadership of the company, to wait. And then you keep waiting and you keep waiting. You want to build up a really strong balance sheet with year over year, strong financials moving in the right direction, and then consider going public. A good example of that is a company I invested in earlier on, which is Palantir. Palantir went public in 2000, and I think it was 20, but they started in 2003. So they went 17 years of runway before going public. And I love stories like that, as opposed to what this guy was talking about. He's like, yeah, I'll take a company public, a year or two after it's founded, make a bunch of money, move on to the next, rinse and repeat. I'm like, feels like a scam, dude.
Well, a lot of those mining companies, they're just holes in the ground, and they might have decent assets, but they probably will. I think most mines that are explored will just remain a hole in the ground. They'll never get developed.
Yes. Yes. This podcast episode is sponsored by Tykr. Tykr is a platform that helps you manage your own investments with confidence. Check this out. Let's search for Apple. You can see Apple is on sale. That's looking good. Score is 61 out of 100, and margin of safety is 75%. Higher the score, the safer the investment, and the higher the margin of safety, the higher potential returns you can make. In this case, you can see the share price is 175 as of the recording of this video, and the upside potential, the fair value, is 398. All right, let's look at a different stock. We'll go to GameStop. In this case, GameStop is overpriced, scores 39 out of 100. That's not looking too good. And the margin of safety is 0%. Here are some other features within. You can create your own custom dashboard. I like to set up and take a look at the top gainers and losers in the last 24 hours. I also like to take a look at the top search stocks, but you can really customize the dashboard to whatever you want. We have stocks, ETFs, crypto. This is a big one. We have a watch list tool that allows you to add stocks to the watch list. And if anything changes, such as that score or margin of safety, you automatically get notified. I call it the set it and forget it feature. And then we have portfolio trackers and alerts. So if you're looking for strong stocks, want to avoid bad stocks, and learn how to invest, I invite you to join Tykr for free. All right, so we got marijuana, we got gold, we got penny stocks. Anything else? Any other good examples of facepalm investments?
I think just the crypto, especially, there's that, you can look at that Dogecoin video on YouTube, and it's hard to tell if it's serious or if it's sarcastic, but look it up. It's a Dogecoin song, and it's saying Dogecoin is going to the moon, and Elon Musk is saying, I agree. And investing has been gamified. People like celebrities going on Twitter and saying, and buy this, or Robinhood, the app, it would have fireworks when you did a trade, right? So I would just think the whole general trend of that, the gamification. And at the end of the day, you have all these retail investors pouring in, but they're swimming in a shark-infested sea with big sharks that live and breathe that stuff, and they know everything. And these institutions are trading ahead of you. They're taking your data, your trading data, and front running it, and using those as feeding that into algorithms and using that to trade against you, if that makes sense.
Well, I would push back. Well, I would agree with that a little bit, but I have to push back a little because as we learned is with investing, with trading, you're 100% right. The reason is somebody's on the winning side, somebody's on the losing side. But with investing, if you are looking at a strong business and another 1,000 people over here are looking at the same business, you can all invest. And that business has an EPS that's increasing quarter over quarter and year over year. Same with the revenue, same with their assets and equity. Everybody can win. And that's where you want to be. Unfortunately, and this is really what you're saying is you've got that shiny object syndrome as people look over here. There's this fancy new crypto coin or this hot new IPO stock or penny stock, and you get media behind it. You get celebrities that have no idea what they're talking about behind it. And then unfortunately, that retail investor that doesn't have a lot of experience or have the right tool, they don't know what they're doing. They put their money into it. Next thing you know, they lose money. So that is an issue today because you see a lot of that pumped on YouTube and TikTok and Reddit and Twitter. We saw what happened with FTX as a great example.
Totally. Yeah, I totally agree with what you're saying. Investing is the way you describe it. It should be about putting your money into companies that have solid businesses, solid products, solid customer bases, and they manage their growth carefully.
Right. Yeah. Yeah. Crypto's a good one. We did add crypto to Tykr. Our listeners will laugh at this. They probably know this by now. And big reason is to bring people into the ecosystem. It's the marketing play. It's like, oh, you've got crypto. Oh, great. And it's like, there are no ratings on crypto. And then they'll ask me, why isn't there a rating on Bitcoin or Ethereum or Dogecoin? It's because a coin is not a business. A business has an income statement, cash flow statement, balance sheet, all that good stuff, whereas a coin does not. And at that moment, it's like, oh, got it. Okay, so a stock is a business. A crypto coin is a digital asset with no income statement, no cash flow statement, no balance sheet. But anyway, bring people in the ecosystem and try to open their eyes to, hey, value investing, Warren Buffett style, that's the tried and true way to build wealth, not gambling with some crypto coin.
For sure. And Buffett himself always said he only invests in things that he understands.
Yes. 100%.
So I think that's a good rule to stick by. If you don't really understand the business, whether you're investing in it or speculating in it, maybe you shouldn't be in it.
Right. That's probably a conversation you have with your customers quite a bit. Like, hey, I can help you out with some products here. But if you do go into individual stocks, probably invest in what you know. Think about your hobbies, your interests, what industries you understand, who you work for. Sometimes that gives you a better starting point than, going on YouTube and seeing what's hot.
That's a great way to start as well, because there are so many thousands of investments out there. So yeah, stick with what you know and stick with what you're interested in.
Right. So I have to ask, are you investing in individual stocks today?
Yes, I have Troilus Gold. I don't know if you know them.
Let's do another. We're going to share the screen here, and
sure. So TROILUS. There we go.
All right, TSX. Uh-oh, we've got a penny stock here, 35 cents.
Yeah. Did you want to know about? You stay away from penny stocks, right? You wanted to know what regular stocks I'm investing in. Yeah, I'm not invested in. I have a lot of funds. I'm not really in any regular stocks, but
okay, all right.
Troilus Gold is. They have really good assets, and they've been careful not to over dilute. I think they're a pretty interesting company. I didn't put that much money into them, but my friend put a boatload.
Okay. So the audience, for those listening, we do have this on YouTube, or it's going to YouTube, but Troilus Gold TLG share price is at 35 cents. Scores 22 out of 100, margin of safety 0. So I would probably run for the hills on this one, but let's take a closer look at the financials.
All they do is drill. They're just drilling and proving assets. Their idea is to drill and prove those reserves in the ground, and then get bought out by a major. That's the strategy for a junior miner.
Okay. I do see their assets did increase significantly in 2021, up to 66 million. They're down to about 30 million in 2022. Equity kind of fell off a little bit too. All right, looking at the share price, returns to date, negative 30% year to date. Let's go 5 year. 5 years, negative 50. Have you made a profit on this one?
I have not. No, I just bought and hold.
Gotcha. Okay. Well, you could be in it a while. All right, funds. Let's check out one of your funds.
Yeah, so I don't know if they're available online like that. Well, they're mostly mutual funds or investment funds.
Okay.
Would they show up there?
Probably not. Tykr has ETFs. Mutual funds, you usually have to go through the mutual fund company. So yeah, why don't you tell us one of the funds you're invested in? Are they primarily in a certain industry or sector? Are they kind of spread out?
We'll just answer your question before. If you're looking for a regular stock that I invested in, it would be like Barrick Gold or one of those gold majors, if you want to pull that up.
Yeah, let's jump back in. Barrick, yes. I've had a few customers mention this one to me. All right, New York Stock Exchange, just GOLD is the ticker symbol. Share price is 16, score is 33, and margin of safety is 0%. Returns to date are -7. 5-year returns, 31%.
Well, the interesting thing about Barrick Gold is that Warren Buffett, who doesn't believe in gold, and always said that he didn't like gold as an investment, actually put a bunch of money into this company a few years ago. So you'd be investing along with Buffett. They're one of the largest gold companies in the world, and they just have huge volume. So they're leveraged to the gold price. So if you believe in gold, and if we saw gold shoot up to like 3,000 an ounce versus the 2,000-ish it's at now, then the leverage would be huge because they mine about 500 million ounces per year. So 500 million ounces, and you increase the price of gold by $1,000 an ounce, that's huge.
Sure.
Yeah. So if you believe in gold, it's a long-term strategy.
Yeah. I'm kind of a contrarian, as you can tell in many cases. I don't love precious metals because to me, it's not a scalable business. It kind of comes in ebbs and flows. Like, hey, it's hot one day and then next it can be not so hot. I like, because I'm so into business, growing businesses or, working on my own, I really appreciate and like companies that have multiple streams of revenue. They're scalable revenue streams, which means they can increase their revenues without increasing liabilities. Long story short, it's usually software companies can do that best. Advertising can do that very well, same as payment tech. So I like businesses, and I kind of steer my audience, go towards more businesses with multiple revenue streams. If you do go into precious metals, set expectations, you could be there for a while and kind of breaking even, as we saw with Barrick.
Okay, I got one more that might be interesting for you.
Okay.
This is one of the growth funds that we offer. The management have invested heavily in this. So it's called Intuitive Surgical.
Yeah.
You know them?
I'm familiar. Yeah. There we go.
You could probably talk more about them than I can. What they do is surgery is going to be like you saw in Star Wars. So you're going to have what they do is they create robotic arms for doctors. So you're going to see a lot of influx of AI and tech into the medical field continuing, and that's what they invest in. And you can probably talk more about it.
Sure. Yeah. So Intuitive Surgical, ISRG is a ticker symbol. So right in Tykr, this one is overpriced, scores 39 out of 100, and margin of safety is 0%. So not looking the strongest. I do like what you're saying, and I've heard the guys on Motley Fool say the same thing. As a few of them do like the stock a lot because it's that, I think they phrase it as non-invasive surgery. So you don't have to get the human body inside, like doing the work. It's those robotic arms. I think your Star Wars metaphor there is brilliant. We've seen this in a lot of sci-fi films. That's the way the industry is going. Let's take a closer look here, and then we'll jump back to the business model. So the returns to date are about 0.3%. Both the S&P 500 and NASDAQ have outpaced it, but let's take a look at the 5-year. 62%, so not the biggest there as well. A lot of there's stocks that have done that just this year alone. But let's jump into the financials just to take a quick look. Revenues, for those listening, I'll kind of speak to what we're seeing. So revenues have been increasing year over year, which is looking good. Net income and EPS have been declining. EPS, we're looking at 2019 was $11.95 per share, went down to $3, then up to $4, then back down to $3. So a little bit of a drop off. That's why that margin of safety is 0%. If that EPS were increasing, that's where we'd see a bigger margin of safety. So what's probably happening here is they're investing more in either tech or people. If your profitability is decreasing in a company, usually that tells us they're adding more payroll, more liabilities. So maybe they're looking at the long-term play, which I would agree with you. You look at where the future is going, I see more robots and this non-invasive processes being the way to go. Sure enough, as I jump to the balance sheet, I'm looking at liabilities. Those have been increasing. So that's most likely people, maybe equipment, maybe if they've got facilities where they're engineering product, then I'd look at manufacturing plants. Yeah.
Okay, pretty cool.
Yeah, familiar, very familiar. That's cool. All right. So this is kind of funny. You're a financial advisor. You personally, you go into some stuff that's a little riskier, but some stuff like the funds, it sounds like you do put most of your money into more some conservative funds.
I mean, yeah, I was into trading quite a bit, not so much anymore, really. It takes time. So I want to focus on my clients. I want to focus on helping them, growing my business, being a resource for people. Probably a lot of that came from FOMO, and wanting, knowing that I got a late start in finance, a late start in investing, and wanting to make up for lost time. And I think you see that that's also another theme or meme, is that people pile on the risk when they're trying to catch up.
Amen. That seems to be a common theme. So listeners out there, if you feel that way, if you feel like you're trying to make up for lost time, don't lose sleep on this. It's something that a lot of people, they're in that boat. I would say probably 8 or 9 out of 10 people are in that same position. And the solution is keep your job, right? Don't expect to leave your job the next day. You want a steady paycheck and just keep investing in the market. If you can, every paycheck, try to get some money aside, just have that discipline. I know some people will run into this issue with Tykr. Somebody will invest in month 1 and then they wait 1 month, 2 months, 3 months, 4 months, 5 months, whatever. And then they invest again. And you can't do that. You have to be disciplined. It's kind of like your 401k. If you work for an employer, they're not going to skip months. They're going to take money out of every paycheck and put you in. So you're probably teaching your customers the same thing. Don't skip months, be disciplined. And that's, if you can do those 2 things, keep a steady paycheck, keep investing, compound interest, it does some special things for you over time.
Absolutely.
Yeah. All right. Let's transition to the rapid fire round. This is the part of the episode where we get to find out who Max really is. If you can, try to answer each question in 15 seconds or less. You ready?
For sure.
All right. What is your favorite podcast?
Yours is one of them. I don't really watch a lot of podcasts regularly, though.
Okay, I made the list. All right, let's jump to the book question. What is a recent book you read and would recommend?
I like Wallace Wattles' The Science of Getting Rich.
I have not heard of that. Thanks for the heads up. All right, movie question. What is your favorite movie?
Probably a Korean movie called Peppermint Candy.
I have never heard of this. Is this a Canadian production?
It's Korean. It's not mainstream.
Okay. Very underground. Nice. I'll have to check it out. All right, a few more questions here. What is the worst advice you ever received?
Probably not to invest in the condo when I was 21 years old.
Right on. All right, flip that equation. What's the best advice you ever received?
Best advice has just been a stream of advice from my mental fitness coach on just how to really change my life and change the way I look at things and believe in myself.
All right, nice. And the last question here is the time machine question. If you could go back in time to give your younger self advice, what age would you visit and what would you say?
I would visit age 19 and teach my younger self everything I know now about investing, and also not to lend money to people who wouldn't
Nice.
pay me back.
Good advice. All right, Max, where can the audience reach you?
You can find me on my website, abundancewealthcommunity.com. And whether you're in the US, Europe, or Canada, feel free to reach out to me if you want to chat. I'm also on LinkedIn. I don't charge for my time, so I'm happy to have a chat with you, give you a second set of eyes, or hear about your story. And if you are in BC or Alberta and you'd like some help with your finances, then I'm licensed in those provinces and able to serve you there.
Awesome. All right, Max, thank you so much for your time. We'll see you.
Thank you, Sean. You have a great one. Appreciate it.